So guys, before we make use of this strategy, we want to first of all see like a break of structure downwards to the downside. That's if we are going to be taking a sell, and that is what market actually did for us, and that is why you can see that we are able to enter this trade. So if you want to make use of this strategy, making use of the candlestick pattern that we talked about earlier, which is the engulfing candlestick pattern, then before you can make use of that candlestick pattern, then definitely you want to make sure the market has broken structure downwards. Okay, and then after market has broken structure downward, then what we want to do next is to spot our support and resistance. So if we see very well, we can see that here is like our sub resistance level. Okay, so this was like where price first of all sold from, and then price sold again, and then this was like the third time price came. And then with this selling here, we can see that price took out this particular level here. So this was like our break of structure. Okay, so we can label this to be like our break of structure here. And then once we are able to notice this break of structure, the next thing we want to do is to wait for price to come back to this resistance level. Okay, and that was why you see that we are able to take this trade. Okay, so what we want to do now is to draw our zone so that we'll be able to see our resistance level properly. Okay, so you can see that this was like our resistance level. So I'm just going to show us how to properly draw our resistance level. To be able to draw our resistance level, then we have to make use of the body of the candlestick. Okay, do not make use of the wick. There are times that you might want to make use of the wick, but let's just stick with the body. So you can see that this was like the close of this buy candle here. Okay, the body here, and then we are going to make use of this body as well. Okay, so this will be like the body of this particular candle here. Okay, we'll use the close of this, the body here. We are not going to make use of this wick here. Okay, we are going to make use of the body here, the close of this body here, and then we are going to draw it and let it get to the close of this body here. Okay, so this will be our lower body here, and then this will be like our upper body here to be able to draw our red zone. Okay, and then we are going to see how price is going to respect it. Okay, so this is how we are able to draw that zone. So you can see that when we place that there, you can see that this was like the upper part of the body. Okay, and then this was like the lower part. And then after we wait for our break of structure here, guys, you can see that price actually broke the structure down. Okay, so it's very important for price to break structure. Okay, this will give us like a confirmation that the market wants to still sell. Okay, that market is still like in a downtrend. Okay, and then we see that price was buying back to this level. Okay, and then price, so you can see where price actually tapped into. Okay, now the reason why we didn't take the sell at this particular level is because we needed to wait for extra confirmation. Okay, because price can actually get to this particular level here and then start buying upward. So what we did was to go to like the 30 minutes time frame. Okay, so on the 30 minutes time frame, remember we talked about our engulfing candlestick pattern. Okay, our engulfing candlestick pattern. So what we want to see that sellers are now in control of the market, and the way we want to do that is to watch out to see that this particular red candle here, this bearish candle, okay, covers this bullish candle here. And that was what happened. Okay, so that was what happened. So you will notice that we could have entered at the opening of this candle, but this was like an aggressive entry because we knew the market was going to be selling. So after the close of this 30 minutes candle, then it would have been safe for anyone to enter. Okay, here, but we just took the trade somewhere around here because it was like an aggressive entry, guys. And then you notice that after the trade started playing out, you can notice that we have like a head and shoulder pattern. So in my next video, definitely I'll be doing a video about the head and shoulder pattern, because it's really a great pattern for like a reversal. Okay, so this is like the shoulder here, the first left shoulder here, and then this is like the head here, guys, and then this is like the right shoulder here. So let me just adjust my stop loss here above the second shoulder, okay, because definitely I don't expect price to come back to that level there. So we are just going to modify that now, and you can see that we've been able to modify that. Okay, so guys, this is where we expect our take profits to get to. Okay, so you can see that we've already locked in our profits, and from this trade we should be making nothing less than $3. Okay, so guys, this is how we are able to take this trade, and definitely you want to practice this first of all on your demo accounts before you go live using this strategy. Remember, it's a break of structure and like a resistance or support strategy. Okay, so this like a break of structure plus a resistance or support strategy, and then making use of your candlestick pattern, which is your engulfing candlestick pattern, guys. So guys, I believe you've been able to learn how to make use of the engulfing, the break of structure, and the support or resistance strategy. Okay, so definitely you want to leave a comment in the comment description of this video. I hope you guys understand, but if you still do not get it, then definitely you can send me a DM on my WhatsApp, then we'll look at it together. Okay, so cheers guys, I'll see you in my next trading video.